In this video, I will talk about support and resistance areas in technical analysis. I will be discussing how to identify key levels of support and resistance using supply and demand zones, and how to use this information to inform your trading decisions. Watch this video until the end, because just before the end of it, I'm going to tell you a really golden point which is going to be handy and becomes really useful in the future of your career as a trader. But what are support and resistance levels really are? Before getting into more details about them, if you haven't watched my previous video, please go check it out, because I pointed out different types of support and resistance, like statics and dynamics ones. But in this video, I'm going to cover up only static support and resistance levels. And the dynamic support and resistance levels will come up, and I will talk about them briefly, while I will talk about the technical indicators in upcoming sessions. Support and resistance levels are key price levels in technical analysis that represents levels of supply and demand for a particular asset. Support levels are price levels where buying pressure is stronger than selling pressure, causing the price to bounce back up from that level. Resistance levels, on the other hand, are price levels where selling pressure is stronger than buying pressure, causing the price to bounce back down from that level. Supply and demand zones are areas on a price chart where the price tends to stall or reverse. These zones are created when there is a significant amount of buying or selling activity at a particular price level. To identify supply and demand zones, you can look for areas on the chart where the price has stalled or reversed multiple times. Support levels are typically found at the bottom of a price chart, while resistance levels are typically found at the top. To identify a support level, look for an area where the price has bounced back up multiple times. On the other hand, to identify a resistance level, look for an area where the price has failed to break through multiple times. Now that we have identified the key levels of support and resistance areas using supply and demand zones, let's talk about how to use this information in our trading decisions. All right, we are here on the chart, and we want to find some support and resistance areas. In order to do that, I recommend you to switch to lower time frames, because the frequency is higher. But later on, we're gonna combine the time frames in our trading strategies. But now on, we just only want to know how to find these areas. First, what we need is a tool, this tool, which is in rectangle. How can you find that? It's really simply can be found here. If you click on this arrow here, just close to the right hand side of this brush, then you can find it here, and you can make it favorite, and it will become up here. Or if you need any other tools, you can just do the same. How can we find them? So as we talked about that previously, we have to find the areas that the price had reactions to during the time. So here you can see that the price bounced off to the upside. So we can just mark this area as a really strong and good support level. And then we can mark this area as the resistance level, as easy like that. Let's do the same for somewhere else in the market. If you haven't checked my video on chart patterns, please check it out. I'm leaving a link above here. Really recommend you watch that, because we have a lot to do with after we learn the supply and demand zones, or let's say support and resistance areas, and then we're going to combine them with the chart patterns and candlestick patterns, and we're going to come up with really good and strong trading strategies. Let's get back to our main subject. So here's a good place. So you can see that the price during the time hit this area a lot. So we can, why are we saying area? Because next in the next upcoming session, I will talk about candlesticks, and you will understand that price is not going to just hit a point or a dot on the chart and then come back, bounce off from there. We have to determine an area which the price may go in and come back from. Then, as you can see, in this case, price hit this point, this area 1, 2, 3, 4 times, and one time even penetrated within it, and then came back down again, and then it could manage to break it through eventually. But why should we do this, and why should we understand these areas? Why sometimes price break a supply or demand zone and come back in? We're gonna talk about this later on, but now you only need to know what are the supply and demand areas, and this is as easy as this. And you have to be aware of the fact that the zones and these areas are going to be switched. They're gonna transform to each other. What does it mean? It means if one area is going to be lost, it's going to reform itself. It's going to transform to the other factor. So if it is a resistant level, it's going and it's going to be broken to the upside, then it's going to turn into a support level. Let's make an example here on the chart. As you can see, we had lots of resistance here, and then the price broke this level. Price broke this level and went up. And then this area, which was a strong resistance and didn't let the price to go through, afterwards, it became a really good and strong support level, supporting the price going up. And you see, and the same story happened again. Here we had a new resistant area. It didn't let the price go up. It went back down, supported here, went up again, and then broke it through and went up. Now we are expecting this previous resistant area after breakout becomes a new support level, which I'm going to talk a lot in the future, because we're going to base a lot of our trading strategies on these support and resistant areas, supply and demand areas. But in this session, I only need you to know these things which are really important to know. And let's say there are millions of ways out there. Getting help from indicators or just find them by your own eyes, how to determine and find supply and demand zones. But this is one of the most popular and reliable methods to find the supply and demand areas. It is really easy to work with. You can even use some indicators to indicate the places which the price bounced off from. Or had some reactions to. But this is the very most reliable method which I am using, which lots of people are using, and you can use it too. But I'm going to show you the other methods in the upcoming sessions when we're going to reach the indicators, technical indicators. No worries. And again, if you have any questions, or if you want me to talk about the specific thing or focus on something or repeat something, just ask me in the comments below. I would be really happy to answer your questions one by one and focus on the things which are bothering or making you busy-minded. When the price approaches a support level, it can be a good opportunity to buy the asset or go long, as there is likely to be buying pressure at that level that will cause the price to bounce back up. However, if the support level is broken, it could indicate a shift in market sentiment and a potential downtrend. Similarly, when the price approaches a resistance level, it can be a good opportunity to go short or sell the asset, as there is likely to be selling pressure at that level that will cause the price to bounce back down. However, if the resistance level is broken, it could indicate a shift in market sentiment and a potential uptrend. It's important to keep in mind that support and resistance levels are not always exact and can be breached or broken, which we call them breakouts, fake breakouts, and I will cover up everything about those in the upcoming sessions. But as for now, especially in volatile markets, they can trick you a lot. It's also important to use other technical indicators and fundamental analysis to inform your trading decisions, which we're going to sum up all of them after some couple of sessions, while we want to come up with different trading strategies for different types of the market. In conclusion, understanding support and resistance levels can provide valuable insights into market trends and inform your trading decisions. By identifying supply and demand zones and using this information to analyze price movements, you can increase your chances of making profitable trades. Now is the time to pay my dues and tell you that golden point which I wanted to tell you and I promised you in the beginning of the video. There is a method of trading which is called price action, which is really popular, very loved out there, and lots of people are using this. I myself am using that too. And it is based on two main factors. First, supply and demand zones or support and resistance areas. And second, the candlesticks, which I'm going to talk about next 4 upcoming sessions. So that's a really long story to be told. And I have to make another, let's say, package or series for it, which is going to be right after this course, which I'm going to finish this just quickly. I'm gonna start recording those videos for you guys. So if you really like what I'm making for you and you want to learn more, please like the video, hit the subscribe button if you haven't done yet, and share it with your friends and give me more motivation to keep going. Thank you so very much. See you in the next one.